Hi everybody, it's Austin at Homeowners Financial, and this is the ABCs of Lending Part 3. We did Parts 1, we did Part 2, this is Part 3. And why are we doing this is because I want you to have a real understanding of how loans qualify, how it works, and different tips and tricks that we can do to help make sure that you get the right program and that you're in the right position. So I'm going to go ahead and share my screen, get this party started, and see what we can learn today. Alrighty, so again, we are talking about the tips and tricks of lending. We're talking about your world options so that you know how to get the most successful program, how to buy the house with the less pain possible. The first couple of classes we did, number 1 was types for programs, for loans and transactions. That's recorded on this as well. The 4 quadrants of the qualification. So in this section, we're doing rules of thumb, tips and tricks. And the reason that we're doing that, there's a lot of different nuances in general of how things qualify, but there's a couple things you can keep in mind when you're just thinking about getting into the purchase market. So the first one's called the rule of 45. So most loans qualify at 45% debt to income ratio. So if you take what you make each month from a gross standpoint, if you're a W-2 employee, self-employed, it's a little different ball of wax, but you take it from a gross standpoint as a W-2 employee and you multiply it by 0.45, that's how much debt you can have each month. So let's give an example. If you make $10,000 a month, you can qualify with $4,500 a month in debt. So maybe your house payment's $3,000. Maybe you have a car loan of $500, a student loan of $750, and credit cards about $250 minimum payment. Boom, $4,500. We are good to go. But if that same situation had a $5,000 a month house payment, it doesn't qualify. So just keeping in mind when you see these ads that pop up or open house flyers, because yes, open houses are a thing right now, that's a number that you can kind of back into to be like, can I qualify for this in general? Really easy way to do it. Let's talk about part 2 of that. Now, these are some general ideas that every $100,000 in price costs on average $600 a month. So if you're buying a $500,000 house and it costs about $3,000 a month. So if you can say, gosh, I want my payment to be $1,200 a month, that is a $200,000 house. Very easy peasy. Again, general ideas. The amount that you put down can change it. There's going to be different parameters. This is easy peasy general ideas. The other thing to keep in mind is 760 is really the highest threshold for rates and terms. So clients are like, oh, I don't want my credit because, I'm at 800, it might super impact. Well, we covered what credit is in that second class. But if you're 760, 761, or 800, it's the same rate. It's that same level. You're at that above 760. Another thing to keep in mind is that closing costs are around 1% of your sales price. So if you're buying $1 million, expect $10,000 in closing costs. These are title and escrow fees. Loan fees, our fees are $1,525. That is our processing, that is our underwriting, that is our doc prep, that is our credit. An appraisal may vary depending on the type of property it is, how complex the type of report you need. But when you add all those things together, including prorations of taxes, interest, insurance, you can level it out to 1%. So if you're saying, I've got it 5% down, don't forget, you're going to need that 1% from closing costs. Another big thing that I want to talk about is building your team and sticking with them. You're not just choosing a program or a rate. You're choosing a reputation, a network, an ally in the process, right? I had some clients say, oh, we got this rate quote. I'm like, great. You don't actually qualify for that. That sounds nice, but here's why your rate is this, because you are a first-time home buyer and you're getting all gift funds and a jumbo loan program, or because your credit score is actually that and you're doing another program with Cal HFA, right? There's the price of things, but there's the value that comes behind it. You're not just shopping different things. Think about a doctor, right? This is one of the most important transactions of your life, and there has to be value in what's done it. Another thing to remember is that the sellers actually pay for the agent's commissions. Could you write in that you pay for it yourself? Sure, you totally could. But that's a big myth, thinking that you have to pay an agent right out the door as a buyer. And the other thing too is that it's really hard to execute a plan when the players are changing constantly. We had an agent reach out today and say, oh, I'm going to show property to this person. Great. And I'm like, but I don't have permission to release information to you. They don't know anything about them. So I called the clients. I'm like, hey, I want to make sure we're okay to release this information and that they know about this part of your life, about this part of their plan. They're like, we actually don't know that person. Please don't release the information. I'm like, great. So it's hard to execute a plan when the players are constantly changing. I'm a big football person. We don't have Drew Brees this year. It's going to be different, right? The other thing is that it's usually easier to afford a higher monthly payment than to save for the next level in down payment. Now, down payments start at 3%. Then they shift to 5% in increments of 5%, 5, 10, 15, 20, right? So because loan payments are made over a period of time, sometimes it's easier to pay that extra a month versus saving to that next level. So remember, we just said that $100,000 costs about $600 a month. Well, if you're saving $600 a month, it's going to take you over 12 years to get to that $100,000 level. And then what are prices going to be? Then what are rates going to look like, right? But it might be easier for to pay that $600 a month payment. Just ideas. The other thing that I think is super, super important is get pre-approved at least 90 days before you want to buy a house. Here's why. There's a lot of nuances to credit that we may be able to help improve your situation. There's nuances to income. There's nuances to assets. There's so many little pesky details when you're looking at a mortgage and putting it together. To put you in that right position, we want you to have the right plan. And sellers, they don't want to deal with people that are just flaky. I had a past client say, can you just send me a letter? I don't really want to buy anything. I just want to go look at houses. And I was like, actually, no. You're not fully intentionally on making any offers. That's not an okay thing to do. That's just misleading people, right? Sellers really only want to deal with serious buyers. And if you're not pre-approved, you're not serious. You don't know where things are going to be. And every state and every region, they do things differently. We're in Santa Barbara, California. That is the 805 area code. It is a different transaction type than Northern California, than Oregon, than Massachusetts. We are an escrow state. We're a good fund state. We are not an attorney state. We're not a table funding state, right? What you're friended back home could be very different. So giving yourself that 90-day window allows you to put the best plan forward. So let's talk about some tricks. So how do you boost your credit score quickly? Well, if you don't have enough history, one thing you can do is add yourself to Go Borrower's Account. You're going to pick up that credit history. They don't pick up yours. I met with a couple today, and she had all the insurance in her name. They had a baby. Some of the insurance didn't cover it. They did. It was kind of a little bit of a mess. And he's had some credit cards that he hasn't used in like 3 years. I'm like, dude, add her to your accounts and start using that. She's going to pick up 10 years of credit history. That's positive. That's going to help your scoring, right? But he doesn't pick up hers. The collections still remain in her name. And then ask for an increase to your credit limit. So if capacity is 30% of scoring, 30% of your credit score depends on your capacity, that credit to limit ratio. Why not just ask for the more limit? True story of myself, I use a Amazon credit card for a lot of business purchases that we make. We buy things for gift bags from clients who are closing. And I realized, like, gosh, I'm charging $5,000 a month and my limit is $10,000. So it makes me not have as good of a credit score. I just asked them to increase it to 15. I still only spend the $5,000 a month, but now my score looks better. The other thing to do is distance yourself from derogatory events. So if you have a credit card that you've had open, but maybe you had a late payment, don't keep bringing that up. Try and use something else to bring that data forward. So let's talk about targeting savings. Now remember that rule of thumb with the 45%, right? The 45% idea, right? So where's that level for which you actually qualify? Now, if we know that and we save 1% of that price for closing costs and the next level down payment, remember 6 overall if we're looking at a 5% down, 11 overall if we're looking at 10% down, start targeting that way. Pretend like you make that payment each month, right? That's the biggest trick, and that's this last one I'm going to talk about. Pretend like you're making that payment each month. So that same couple I talked to today, their rent is $2,500 a month, but they feel comfortable that they can buy a house at $35,000 or $4,000 a month. I said, great, take that difference and start throwing it into account and don't touch it. Like, how do we do that? I'm like, you just pretend like you're making the payment, right? You just suck it out into a savings plan, right? This is going to let you know also how quickly you can save money. But is that a comfortable payment level, right? Do you get 2 paychecks a month and your partner only gets 1? What does that look like for budgeting? So if you have any questions on anything, please let me know. I am happy to answer them. I want to give you, again, the most education, the most information possible. My name is Austin with Homeowners Financial. I hope you have a great day, and we'll talk to you soon. Cheers.